Today's session is really going to be a kickoff for new members in the club, and also to share some of an overview of how we operate, what we've invested in, resources that you have available to you, in the club. And I know a lot of people are going to listen to the recording of this, but if you want to chime in with questions, feedback, at any point, you're welcome to speak up live or drop something in the chat, and I would be more than happy to address it. So thrilled, that we're growing and we're approaching 30 members now. And I'm going to walk through a bunch of content, as it pertains to the club and how we're operating today. Some of these things may change, but this is really kind of a snapshot of where we are at the moment. So a quick overview of what we'll be covering today. I'm going to walk through the resources you have available. We'll speak to some of the club operations and how we're actually looking at and operating as it pertains to investing and what a typical deal cycle looks like. And we'll also do a quick review of our investments. We'll additionally cover some more concepts, but this is the high level of what we'll be diving into. And so first, resources. You may or may not have a background in investing, and most club members do not. I've sent around a survey so that once you join, you're actually going to share with us what is your background. Most individuals in the club are ranking themselves around a 5 or below, where a 10 means you really know what you're doing, and a 1 is, I'm new to this, or 0, no experience. And so a lot of these, individuals in the club may have experience investing in another asset class, but not in early stage, not in, growth technology or series A or seed or pre-seed. And so it really is important, I think, that we are making some resources and educational things available to you. And also we have the door open so you can ask any questions and learn, throughout the journey. So a few things up on the slide. The Introduction to Investing series is a program that I created on the back of individuals just having interest in learning. And it really was what created or precipitated the club, because people out of the series said, we want to invest with you. And so the Introduction to Investing series, you have a link to that when you were welcomed to the club after you joined. This is something that you have access to, and it's pre-recorded, it's self-led, and it contains roughly 5.5 hours of content, in addition to some exercises, including, some Q&A and interviewing with other investors. So it's a really great place to get started. But there's nothing like learning by doing. So I wouldn't say, just do that. By being in the club, you can be as active as you want, and by thinking about or actually writing checks, that's obviously the best way to learn. But there's a lot of additional content that we're providing, and that we will provide on an ongoing basis, really to get you started. There are also numerous shared documents that we've sent you. A lot of them are linking to Google Drive, and these documents are going to present you with or give you access to information like, what is the makeup of the club? Right? Who are the other members? How many are in it? There's an overview blurb. So it's small text on the screen, but an actual description and overview of the club itself and how we invest. And so you can always check back and use this kind of thing, copy and paste even that blurb or modify it if you're looking to share with somebody else a little bit about how we operate and who we are. There's other information in these shared docs. We'll get into that, but again, these links should have been made available to you when you first signed up and when you were welcomed. You can ask at any point if you still want those links and if you can't find them. There's also a deal platform we currently use. It's called Smart Capital. And some members of the club are actually observers, meaning they're learning and not investing. So if you are an investing member, you've been given access to Smart Capital. And the deal platform is something that we use to navigate interest, commitment, move you forward with documentation around actual investments. It's how we form syndications. Question, nobody's asking, I'm just going to answer it myself. What's a syndication? Terms, definitions, a lot of this is going to be spelled out on that member document that I've already referenced, but we can talk about that, and that's something we'll talk about a little bit today in a later slide. So let's talk a little bit about club operations. And I have a few slides, digging into this. But the club is operating across, numerous ways. The first one I want to talk about is business development. what is business development as it pertains to the club? So we have, approaching 30 members, and hopefully we'll grow from here, but business development, going out, finding companies through our network and through referrals and by, having conversations and telling people you're an investor or you're in an investment club, that's part of finding really good deals. How many deals can we find? What are these high quality deal channels? You can update your LinkedIn, right? You can say, investor among the other things like, board member or board candidate or speaker, or whatever you have, right? You can actually link even if she's independent, and you can show I have professional experience investing. You can make referrals. And I would say what's really exciting is the majority of our members right now have been referrals. So it's not just my network, but I'm loving that, we're getting referrals and we're getting really high quality individuals joining who are really excited and passionate about what we're doing. So a big part of operations is, what is our network, right? What companies and deals are we seeing? And so the more that we kind of build out who we are, the better we can operate, the more efficiently, and the better deals we're going to see. Pitches. So there's a lot that goes into, once we find a business, do we want to invest? And the early stages, and we'll again cover this a little bit later on, but some of the early stages of the pitch are, do we want the company to pitch? So we'll have a voting mechanism to decide who's going to pitch us on, roughly a quarterly basis. And then we'll coordinate and either live and or have, a recorded session of this. We'll actually gather these pitches from founders, from people that are fundraising. And there's a club, we're determining through live Q&A, through coming together and thinking through, do we want to actually invest? And if we do have enough collective interest, or if there's enough individual interest, and if the company is open to small enough checks, then we step into that diligence phase. In diligence, if you've ever made an investment, even if it's not in the types of businesses we're investing in, it's, okay, it sounds good, but do I really want to invest? It's checking the boxes. It's, okay, is this credible? Is it actually what the founder said? Is it really the market that we think it is, right? What does the traction really look like? And it's digging in, and it's, hey, what are the customers saying? What are other investors saying? And so diligence is absolutely, one of our deep operations that, is really important to how we're running. Administrative, I put last, but it takes a lot of time and effort. And think of administrative as, anything to do with more people are joining, right? Onboarding, around, interest in investing. Are we forming or coming together as a group to collectively invest? There's a lot of, legal documents. There's a lot of chasing, checks or wires or whatever it is, but there is an administrative element as well. And so these are kind of the main, and I'm not covering everything, but these are the main functions in which we're operating. And to get a little bit deeper into, how we're operating, I'll spend a little bit more time, digging into some of these concepts, but there are leadership roles available. And so if you're in the club and you say, hey, I love what this is, I'm really excited about investing, or maybe I'm a lawyer by background, or there's something that I can bring and there's something I want to do on an ongoing basis, there is the opportunity to have a leadership role. And a few of our leaders that have stepped up and have been doing a lot more individually are on the call. So I'm going to ask for a little wave from, or I guess a wave, and you can say hello if you want, Kristen and John. They were really heavily involved in some of our early deals, and they said, hey, how can I do more? I want to step up. And it's been really wonderful, having them help on various levels.
I can chime in. I'm already off mute. So I've known Natalie for a long time, and I've always been very intrigued by what the heck it is she does. And just learning from her, and any chance I got an opportunity to learn from her, I was like, oh my gosh, tell me more. So when she put this together, I knew I had to be a part of it, even if I wasn't going to invest. And lo and behold, I already invested twice. And I've really enjoyed learning from her. So anytime I can jump on a call that's live to hear her questions or hear how she frames things, it's extremely helpful. What we learn as we do this is helpful in so many different aspects of business. And even if this has nothing to do with your current role, it could help you the next time you go through an interviewing process and try to contact someone who's like at an earlier stage company, and you just want to have a feel for where their business is going and how they're doing. So I find this to be extremely applicable, even though my day-to-day, I'm not an investor. I'm not in finance. I really have no experience until this club. And as Natalie said at the beginning, I've only really invested in real estate deals. So this is totally outside my comfort zone, but I'm super excited by what I'm learning. And I think there's going to be a lot of really cool opportunities to come that Natalie and I are, and others are kind of talking about and working through.
Great. And John, feel free, you don't have to give as much, but whatever you want to say or share. I know you've stepped up, so feel free to say hello.
Sure. Hi, everybody. John Fernandez. And you're probably wondering what a guy is, what's a guy doing here? And it is an inclusive club. My wife and I joined together, and the way things have kind of shaken out, I've just been more involved than my wife lately and been helping out with a few different deals. And Natalie and my wife go way back and actually went to high school together. So many deep connections in the club. And over the past month, I've been able to make new colleagues and new friends. Rachel and I work together on the Vecta syndication, who's here as well. Hi, Rachel. And Kristen and I are working on things together now. And so it's just a really wonderful, inclusive environment where I came with some background in investing, but Natalie knows a ton, and I'm learning more and more every day and having a lot of fun.
Great. Well, thanks so much for chiming in. And listen, you can have a leadership role on a deal. So Rachel, as an example, stepped up and did various things on a specific deal. Kristen and John, worked on various deals, and then they said, hey, how can I keep doing things? And so you have opportunities, and we'll talk about this later, but you have opportunities if you want to do more. You can also just passively learn or write checks or just be here for the network. But I just want to say, there's a lot of opportunity for, depending on your capacity and your interest level. A few other things to think about in terms of how we operate: chasing deals. So what do I mean by that? When we're interested in a deal, right? Or we want to get information from founders, there's a lot that goes into not just the upfront introduction, but making sure that we're actually navigating and getting on the calls, making sure that we're chasing what we need to feel really good about diligence, making sure that we're chasing club members, ultimately, if there's a lot of interest, to form that investment entity and ultimately invest in the business. So there is a lot that goes into the operations that you may not be aware of, just mentioning. And again, individuals sometimes will step up and help with these things. The syndication admin I mentioned a little bit before, but there's just a lot that goes into creating these investment vehicles. And we'll share as much as you want if you're interested in learning about it. Finally, nurturing businesses. Not all businesses are ready for investment, or they're ready, but we don't want to invest yet. And so cultivating, staying in touch, networking, right? This is all a part of what we do as a club. We also have a slide that we'll close on later that says a little bit about what happens after investment. But the point is just staying after our network and making sure that, we feel good, or we're staying after and being proactive for businesses we like. It's a part of operations. All right, so the typical deal cycle. What do you expect? What does that look like? So the earliest stages are, you got to find it, right? What deals are we actually going to look at? And they come through a bunch of different deal channels. I'm not going to get into all of that, but the Introduction to Investing series does cover a lot of that information, which you all have access to. But basically, there's some form of screening that happens before club members hear about it. When you find a business, whether it's you find it and you want to learn from, myself or others in the club, or you feel pretty good about the process and you want to just run with it autonomously, we want to screen the business. We want to make sure it's legitimate. We want to make sure that it aligns enough with either what the club may be interested in, or how we invest, or our timelines. And so running a screening call to ensure that it's quality enough, it's interesting. Let's just say maybe the founder, it's somebody that we can actually put in front of our audience. These are all things that we're kind of screening on before we put it to a vote. And so the next point is, we actually are documenting and coming up with a list of, I think we have about 15 companies or so that we're going to share with club members shortly, but we ultimately will vote on and determine how much aggregate interest is there, so that we're getting the deals or the businesses to pitch us where there's the most club interest. We may at some point, and we have a bunch of interested individuals who have investment backgrounds, we may end up formalizing and having more of a deal advisory committee that does the voting versus the club, or we may have both of those layers happening, but right now we're having club members vote. And so instead of having kind of a messy, low quality, 8 companies pitch us, we're going to aim for 2 to 3 that are going to pitch us each one of these pitch days or pitch events. In the pitch event, which we're aiming for quarterly, but again, it may happen every few months, it may happen a little off cycle depending on what we find. It's this event that's live, but we also record it. And again, it's a place for us to learn more about the businesses. Founders are coached, or not coached, but given a little bit of information to say, we want, a tight, concise pitch, maybe 5 to 7, maybe 10 minutes, but we want to have a little time for Q&A. We want to learn more about you and the business, and there are things that we'll look for. I'm going to share a little bit more documentation with you all, and again, resources to get you thinking about what should we be looking for in a pitch. But these are all things and resources and basically a repository that we can build up and learn from as we do more and more of these, but a starting point or a starting place. And again, I cover some of that in the introduction series as well. So what happens out of the pitch? The diligence is something that we talked about very briefly, but if we have enough collective interest out of the pitch, we will let the founders know if we want to pursue diligence, if we want to further dive in and determine if we want to invest. And the diligence process itself, it all is timelines based on, when is the company looking to close its raise? What does that company, ultimately look like in terms of, can they connect us with customers or prospects or whatever's in their pipeline? Do we have enough information to get through all the basically diligence to determine, do we want to invest? It could take a week if they need a really quick turnaround, but that's probably really tight. It's more often going to be 2 to 3 weeks, maybe even 4 weeks, maybe even a little longer. I'm just giving you kind of the what we would aim for or what we're communicating to founders that we expect. That doesn't mean we're actually sending them money in 2 to 3 weeks. That means that we're determining in that diligence window, do we actually want to invest based on the information we gathered, the analysis we ran? And something that I like to share here is we are not leading diligence, meaning we don't want to be the only ones investing in the round. What do I mean by that? We want another investor to be the lead or the investor that's doing deeper diligence, right? An institutional player or somebody that's taking the lead on the round to negotiate things like terms and to really dig into all the numbers, right? We want to look at the spreadsheets too, but we don't have a bunch of money, let's say, sitting around to really pay people to really do the type of deep diligence that a lead investor would do. So part of what we're doing as a club is we are doing our own diligence, but we're also piggybacking on or not leading the deals. Maybe that changes at some point, but that's how we're currently, operating. The close. And so if we have enough aggregate interest, are we going to invest in firming up commitments? That's typically taking about 2 weeks, could take a little bit longer. Again, there's a lot of things from administrative, money flows, setting up the operational agreements and all that. And we have some efficiency in there, but it still takes time. So all in, maybe it's a month, maybe it's longer, right? That being said, right, typical doesn't mean we never have atypical. And so some of the deals that we've invested in have been faster. And sometimes it's the individual checks that we're writing and not the syndication or group investment. Oh. And so if it's an individual or direct investment, basically, the founder may take a check for $5,000 or $10,000 or $25,000, and maybe the overall group doesn't want to put in, 50 or 100, but maybe individuals are going to invest. And that typically happens a little bit faster. And if it's a really quick deal cycle, that just might be the only way to go. So we have made several direct investments. We'll talk about those ones later. A syndication is when we're coming together collectively as a group. And the beautiful thing about the syndication is we can basically bring down the deal minimums to something like $2,500, where you don't have to write really big checks and you can still participate, right? You can still diversify and have a portfolio that you're building up. And so there's different ways to invest in terms of how we operate. Now, what are the terms of the investment, right? How does a syndicate come together? What is it? There's a bunch of different ways that founders may want to choose to fundraise, and I've just listed out a few here, and this happens to cover the types of investments that we've currently made. I've also given you a screenshot of the actual terms from one of the investments we made. And so these types of documents, these types of investments, you can actually access it through our Smart Capital Deal Portal. There's multiple document repositories that exist under a syndication, so you can actually review these documents. We can also share them with you if you don't have access and you want to learn and ask questions. But at a high level, the different types of investments we've currently made are preferred stock, convertible notes, and safe notes. And just a highlight or kind of a shout out that by being more active, if you want to participate in a deal, and if you source it, meaning, it was in your network and you pitched it and we liked it and we invest in it, or if you wanted to help with diligence or anything else, you can actually get more exposure to the deal through your active participation. And the term carried interest, or carry, is something that we actually have a breakdown and show you what you can earn by being more active on deals. And this is all in one of those documents we've linked. It's the member document. And there's actually a tab that lists out a breakdown of syndication or carry fees. And so what we're really thrilled about is we're giving away, or basically allowing you to participate in, half of that carried interest, or half of that exposure that we're kind of marking out of the deal. And we'll talk a little bit about carry, later on, but I just wanted to point that out. And I have a screenshot here of what's called the side letter agreement. And so when we're creating the agreements, when we're creating the operational information that governs, terms of a deal, there's actually an agreement that says this individual, helped, and this is how much deal carry they get. This other individual helped in this capacity, and this is how much deal carry they get. And so this is something that we're actually putting in as a part of our documents, basically. And just a reminder, right, that being an investor, no matter what you do, active or passively, you are really getting rewarded. Whenever you work at a company and they say, hey, here's some equity or here's options, it's something that vests over a multi-year period. It's something that only starts vesting after a year. As an investor, you get the ownership immediately. You have a say in the businesses. We may, at some point, as we start writing bigger and bigger checks as a group, we may start getting board seats. Either way, without us demanding a board seat, we still can be influential to give individuals to sit on boards, or to be advisors, or to be, strategic in some capacity for the business. So we really are influencing, and we really are doing something, not just with money, but influencing the dynamics and the success of these businesses. Power dynamics. Just want to throw that out there, right? Because we're all aware of the wage gap and the pay gap, that women basically are paid, 70+ cents on the dollar. If you're a white woman, by the way, it's lower if you're a woman of color, but the equity ownership gap, the VC funding gap, these are just massive. Less than 3% of women are funded by VCs. Or I should say, women with businesses receive less than 3% of VC funding. Black women, less than 0.5%. There's real opportunity there, right? And part of it might be the way that we're presenting as women, or part of it might be the network. We don't just invest in women-owned, but we're really excited about impact. And I guarantee you the conversations we're having, even when it is a male-only, founding team, when they add she's independent to the cap table and they're really excited to do it, they're telling us they care about diversity. They're telling us they want women on the board. They're telling us they're excited about getting women involved in the business. The last point, which I italicized, which is a fun one, is it's easier to invest than to operate, assuming you have the money. But what do I mean by that, right? If you write a check, you can get a ton of exposure to a company that you may work, super hard for 3 or 4 years to get vesting, and you may get more exposure as an investor. And by playing as an investor, by understanding these fundamentals, you can actually start calculating and understanding, what kind of ownership do I get as an investor? What kind of ownership did I get when that company offered me equity? And I guarantee it's going to be eye-opening. You're going to say, wow, as an employee, they promised me the world. I got basically nothing. And by writing a small check, sorry, small, but maybe $10,000, I'm actually getting a lot of exposure because we're investing early stage. Okay, a little bit more about the logistics of how we're operating. So annual membership dues, this is something that we're applying towards syndication fees, administrative fees, operating expenses. And while we have assessed some light charges for syndication fees upfront on our first few deals, it is something that I'm planning to have us fully cover in the future. But it's partially based on how big is our group. And so how many deals are we investing in? Roughly, it's costing us about 4,000, maybe approaching 5,000 soon for each syndication. We've done two syndications this year. And so they really do add up. I'm also exploring with some lawyers. We may want to move to a potentially lower cost, more efficient way to syndicate. But honestly, in the scheme of things, these aren't really high costs for an investment vehicle to come together. And we need to make sure that we're covering everything legally and doing it the right way. As I mentioned before, right, you can be passive or you can be active. Anyone is welcome. All backgrounds are welcome. I love that in the survey, which a lot of you have filled out, and if you haven't yet, please fill it out to tell us a bit more about yourself. We have people from all different backgrounds, all different experience levels. And as John chimed in earlier, right, we do have some men in the club. We're open to anybody. But what I'm most excited about is we want to make sure it's this safe space for learning, for asking questions. I have been in other investment clubs and I have seen far too often, it's a group of primarily men and the women just aren't speaking up or asking questions. And it's partially because of the demographics and who's in there. But I'm telling you, this is a place where I want you asking the questions. I'm loving the engagement from all levels. And it's something that I think we've created and cultivated, given the people that are in it. And so what really makes us different? I talked a little bit about that on the prior slide, but I think on the whole, we're excited about the power dynamics. We're excited about how do we get more women in these positions of power? How do we get more diversity on the cap table and otherwise? The education and the access are also, at the forefront and a big part of what we're doing. I have never seen another investment club that offers a tier or a membership access for somebody who's not accredited. And I'm thrilled that we're doing it. What is accredited? It means you have a certain amount of wealth or a certain amount of income. But guess what? Not everybody has that today, and they might still be interested in playing or learning or participating. And so you can be an observer and you can be a part of the journey, even if you're not writing checks. And I'm thrilled to be able to do that. There's absolutely no management fees. As I said, there is this modest carry or this carried interest where basically when we come together to form a syndication or a group investment, we are going to take out a little bit of that, and that's going to be paying for or covering some of the costs or things if we make money on the back end. Meaning, if we raise $100,000, I shouldn't say raise, if we come together to invest $100,000, and if we have a 10% carry or carried interest, that means that 10% of the 100,000, that's going to be something that basically is going to go to, let's call it management operations, if we make money on it. And so there's no kind of cost up front. It's something where if the companies ultimately perform and it's a 5X or, on the $100,000, it's returning $500,000 or 5X, meaning returning 500 on top of the 100. Sorry, I'm doing quick math. 10% of that is actually something that comes out as carried interest. But think about it, right? If we're covering costs and we're doing all these things to make it happen and build this group, it's something that a lot of investment clubs are actually charging upwards of 20, 25, even 35% on your highest earners. So 10% is extremely modest. And what I've proposed is we actually move to 15%, because keep in mind, I'm offering 50% of this to people that are actively doing things, stepping into leadership roles, helping us source deals. And so you can actually earn more by being more active in the club. And the way our club operates, it's not like we're making money as a business. It's basically getting you all excited so that we can scale our operations and learn together. So again, just to say that in a different way, if we were charging, as a lot of clubs do, 30% on your best performers, that really hurts your portfolio. We are charging a flat, modest carried interest. And so it is very unique from other investment clubs. If you're doing a direct investment, there are absolutely no fees of any kind. And there's no cost for us to syndicate, none of that administrative work. So a quick note on, the club makeup and investment opportunity. You can access, how many club members are there, how many are actually investing members, what's our, rough aggregate capital commitment, or what are people planning to deploy over the next 12 months. This is all accessible on that member share doc. You as an individual can absolutely determine whether you want to invest or not, and you do not have to invest. It is completely up to you on a deal by deal basis. You could determine, you could say, hey, I think I'm going to invest $50,000 this year. And then you could say, you know what, I actually don't want to invest. And that's okay. You could say, I think I'm going to be more passive, and then you could invest, right? It's completely up to you. On a deal by deal basis, individuals in this club determine how you want to allocate capital. And you're learning and you're participating alongside others. So it's our collective experience. It's our collective diligence, right? That's coming together so that you can feel confident in terms of what you want to do. And by the way, it isn't necessarily just, I think I'm going to make a bunch of money on this deal. I don't just want to invest for impact, right? I like money, but I might also like what we're investing in. The fact that we just invested in a company that's doing something for the environment, another one that's doing something for education. So I'm doing it because I expect, or I think that there may be good returns, but I also feel good about this. And I'm also excited about that learning journey. Deal minimums as low as $2,500 for accessibility. Again, on a deal by deal, we may actually determine for any given reason, maybe it's $5,000 minimum, but I'm going to try to make it $2,500 minimum on a deal by deal basis. Now let's talk about the deals we've actually invested in and some that we have not. And I guess one that we have not. So the first deal that we actually looked at as a club, I was so excited by the type of business it was. We're a group of predominantly women, and we looked at a baby feeding app platform. And we have a lot of moms or individuals who know a lot about motherhood. And it was just a market that, club members are really excited about. What I'm really excited about is that we didn't just get overly enthusiastic and say, yes, we're going to invest no matter what. We dug into diligence and we dug in and we monitored and we watched and we said, oh, missed the mark there. Oh, that didn't make sense. And we didn't invest, right? We don't always invest. By the way, you want to look at a lot of deals and you don't want to invest in all of them, right? You're not going to be able to find a bunch of winners. And so just sharing a little bit about this one. And by the way, Nurture Talk also goes by Mother of Fact. It has two different names. It kind of rebranded. We came together, we looked at it, we were really excited. And ultimately as a group, we said, nope, we're not going to invest. Now let's talk about some of the ones that we did invest in. Vecta was our first syndication. We came together for $70,000 in aggregate, meaning different members invested, and together we came up with $70,000. And it's a green energy transformation marketplace. Strong team. They had backgrounds where they'd already done this before. They had some interesting data-driven approaches. We really liked the founder. And ultimately we dug in, even at a conversation with another one of their investors who was leading the round, and we liked the deal. This was sourced through a deal channel that was actually through a network of this group of board women that I'm a part of, and some of you are a part of. And ultimately, it was a pretty easy close for us. It was a preferred stock deal in terms of the terms, and we're really excited to be on the cap table. They wanted a $100,000 minimum check. And ultimately they offered us $50,000 minimum, and they were thrilled to include us at She's Independent, even though we got to the 70. Another sample deal of what we invested in is Legends of Learning. So this syndication came in for $60,000. And this was something that I think, again, for probably the moms out there with kids in grade school, it's a K through 8 e-learning platform with an interesting play on the metaverse. If you don't know what I'm saying, that's okay. You can also access information through Smart Capital, that deal platform, if you want to just dig in and see kind of what we've done there. We are dropping resources for the companies we invest in. Again, it was a high quality deal channel. In this case, I knew one of their investors and I'd known about them for a little bit, but ultimately they kind of snuck us into a round where, again, they wanted a higher minimum than we were coming in with, but they were so excited about us that She's Independent. They not only gave us a lower minimum, but they restructured the convertible note to allow us to meet legal requirements, and basically something that we said, we can't invest in the convertible note you have, and they changed it for us. So really wonderful to see that. They were really excited to get us on in terms of investing. And that's also one of the upfront syndications we closed. Doing really interesting things. I will say Legends of Learning was a little bit further along than the other deals we looked at. A lot of the deals we've looked at are seed or pre-seed, meaning pretty early. Legends of Learning had already done an A, and they're, getting closer to probably a B raise. And this is a convertible that kind of gets them, allowed them to basically open up after they closed the A round because there was more interest. But we really liked it. And, they have some really great data and stats speaking to their traction. They're in about 5% of schools nationally today. So there's not one type of thing we invest in. That being said, we have looked at a lot of seed and pre-seed. Some of the direct investments that we've made are up here on the slide. And so again, these direct investment opportunities, they're less complex, they can move faster if we don't have enough aggregate group interest, which may be just a factor of our club isn't big enough, right? I've heard a lot of clubs to be quote unquote successful need closer to 100 members. Ours has only under 30, but we have a lot of active people and a lot of people that are getting involved. But if we can't reach that, minimum syndication amount or that minimum collective where it makes sense, because there are real costs to syndicate, we can do direct deals as well. And so 3 of the deals that we've done or offered to club members, we've offered more, but 3 where club members have actually invested directly are up on the screen. Predictamed, they use artificial intelligence to basically predict early autoimmune diseases. It's something that I was really excited about. Our family has a lot of autoimmune disease. I think women on the whole get more autoimmune kind of diagnoses than men, but it was something where, again, a high quality deal channel, really exciting one. Unfortunately, it was a little bit of a higher investment minimum on that one. So we did not have others invest, even though we had others interested. But I invested in that one, and it was something that the club did have access to. Another one, and actually our first direct deal, is called Loops. And Loops was, again, a high quality deal channel and an interesting one where they play in email marketing. Email marketing and automation, we know, is a somewhat saturated space, but these founders had built something previously that basically said they are experts in their space. And it's also a Y Combinator business. And there's a lot of really, great companies that come out of Y Combinator. Not to say they all are doing wonderful things, but it's a really kind of high caliber accelerator that they went through. So that's one that we invested in, a few of us. And then the third one that was the direct investment is called Topple. And they do ESG for blockchain. And I know that's a mouthful, right? And it may not make sense, and that's okay. But the point is, they're doing some really interesting things around how do you actually have governance? How do you actually follow and make sure that there's accountability for ESG, right? Not just say, oh, it's something we do as a business, but really interesting things that they're doing where they're basically waiting to decentralize their technology until they already have efficacy, they already have use cases, and traction in the market. So again, these are deals that, there were no fees on. Some of the direct deals that we showed individuals that are in the club, and all deals that at least one club member invested in. So deal sourcing, right? How are we doing this? Where are we aggregating the information? One of the documents that we've made accessible to you, which you have right now comment privileges unless you're on the leadership team, but we can open that up so that you can edit it as well. Just let me know. But basically, we have a place, a repository, where we're putting all the different companies that we've basically screened and that we're thinking about voting on for the next pitch session. And so I'm going to email everyone soon. We're going to go through another pitch. And again, this is a regular thing we do, but I'm just adding tabs to the deal sourcing document so that there's this repository you can always look at. You can ask questions, you can drop in, new companies. And it's a place where you can also say, oh, what did the club already look at? What did they pass on? So you can actually access this at any point. So finally, what do you expect post-investment? We've invested, right? We have some direct investments. We have some aggregate syndication investments. There are things that we can do as a club to ensure, or let's say help and do things to hopefully make the companies do a little bit better, whether it's driving more traction, making introductions. But there's a few mechanisms we want to talk about. One is the people that actually invest in the deal. We're going to make sure that we're sharing regular updates. Might be quarterly. It depends really on the business. There's no stipulation that they have to do it quarterly. But if there's a deal lead or somebody on the She's Independent team, and I'll be kind of the default backup, but let's just say Kristen or John as an example might run in this role, maybe Rachel. we'll basically be sending regular updates to say what's going on with the business. And so with those regular updates, right, that's going to be updates from the business. The business may have asks. Today, we actually emailed those that invested in Vecta and we said, hey, Vecta is doing a webinar. It actually happened to be at this exact time. But we said, feel free to share this on LinkedIn or with your networks. We want to basically help them drive traction. We're excited about what they're doing. I actually posted on She's Independent's LinkedIn today, sharing that webinar. We want to make intros. We want to be proactive, but not annoying, and I think sometimes it's a fine line, but basically, where can we be helpful? Kristen chimed in earlier and shared a little bit about, what she's been doing with the club. But something really, interesting came up the other day, and we actually got her in front of one of the companies that pitched us, two of the companies that pitched us, because with her CS, customer success background, there's actually a few companies she could do some really interesting advisory or board work for. So how can we be proactive? How can we help these companies, right? And the typical timeline, as a reminder, if there's a distribution event, because there's not always, right? Think of early stage investing as very risky. Your money's locked up, your money's tied up. If there's a distribution event, it might take 2-3 years, 5 years, 7 years, 8 years, right? On average, what I've seen at least is 3 to 7 years. Your money is tied up, right? You don't want to bank on this. It's not necessarily something where you can say, hey, I need to get out of this position. Sometimes there's opportunity. But the way to think about it is you're investing in something high risk, high reward, right? So all things to think about. So that's what I had prepared. I know that it's been a little bit quiet and I've been probably speaking your ear off. So if you have any questions, you have any thoughts, feel free to chime in. Again, this is recorded. I will be circulating it to club members. And if you don't want to speak up live, you can also drop something in the chat and I can just read from there. Yes, Gretchen.
So for instance, Vecta, if there are subsequent rounds, are you putting that back in front of the club because you have new club members who may not have been able to invest in that first round?
Absolutely.
They raise money in the future?
Oh, it's such a good question. So part of why I think there's a few reasons why it's fun to invest early. One of the reasons is valuations can really explode, right? And by investing early, you can get this really big, call it a multiple expansion on, where you invest. The other reason it's really fun to invest early is we then will get a look or opportunity to invest in other rounds. The beautiful thing about investing early is you're learning, you're getting information. And so at later rounds, we can say, did they do the things they were going to do? Are they executing well? Because when you run diligence, you only get a little bit of information, right? It's a little bit kind of the story they're telling you. And it's our job to figure out more. But when you've invested and you're really seeing execution, you're really getting to know the company, you have that much more information of, do I want to invest the next time? And so some of the best investors out there, Primary Ventures is an example, investors I know back in New York, part of the reason they've done so well is they do such a good job of the follow-on investments in the companies that they really believe in that have done really well. And by the way, they're really tracking and following companies and founders, so they know them before they invest. And so Vecta, I think, is a phenomenal example where I know we have a lot of people that come from an energy background, in the club. And even if there's not an investment opportunity in the next 6 months, maybe there's a board opportunity. By the way, I know there's a board opportunity and they want a woman. And so being able to have those conversations, have the doors open, absolutely, we could invest later, but either way, there could be other opportunities to get involved. Great question. And I can introduce you, to Gareth Sooner, who's the founder there and really great. And so that could be a conversation that you just explore with him, again, in parallel with everything else we're doing, because even if there's not an investment opportunity tomorrow, there could be something that you do with business.
Thank you. That sounds
great. Anyone else have questions? All right, well, I'm thrilled that we are approaching 30. I have to say, having launched in just January formally, this is a really exciting journey. And, I haven't really done much marketing. I guess it's been more kind of organic and just sharing it with a few people here and there, but let's keep growing it. I think that by getting some more people involved, we'll continue to see more and more deal flow. We'll be able to cover all syndication fees, and hopefully get you on a lot of boards and really great cap tables. So I'm excited. All right. Well, enjoy the rest of your day. Look out for our emails, and see you soon. Bye. Oh, cute, John.